Global with David Thomas, a regular video podcast designed to keep you up to date with developments in emerging markets. This issue is brought to you from my hometown, Sydney in Australia, where I've been hosting my client East Capital, a $5 billion fund manager which specialises in investing in Eastern Europe. It's actually one of the largest investors in Russia, a country that's often misunderstood in Western terms. East Capital's chief economist, Markus Svedberg, was in Australia recently talking to investors, institutions and advisors about the prospects for Russia and Eastern Europe. Here's what he had to say.
Yeah, this is one of the everlasting misconceptions about the Russian economy. The biggest part of the economy is actually consumption and domestic demand in general. Oil prices are important for the budget, but the main driver of the economy is consumption. Almost 2/3 of the economy is made up of consumption, and consumption is growing very briskly. It's almost 10% on a year-on-year basis. But they do have a challenge, and one is to reduce the dependency on oil exports for the budget. They're very dependent on that, which indirectly also influences the currency. But they also need to change some of the domestic demand from consumption to investment. Infrastructure spending, improving roads, railroads, airports, and so on and so forth. So that is a trend that I think will gain momentum in the next couple of years. So perhaps a little bit less consumption and more investment. And oil prices, again, is important, but it's not the number one driver of the economy. Yeah, we think so. Russian foreign policy is receiving a lot of negative publicity, but if you look beyond that, you're seeing that Russian commercial relations and Russian consumers are starting to take a bigger stake in the world economy. Russian tourists are quite active around the world. Russians are traveling more, but also Russians are consuming a lot more. Many foreign consumer-oriented companies are establishing operations in Russia. It is the second largest car market in Europe after Germany. Many European retailers like IKEA, like Auchan, like H&M are moving into Russia to capture the large middle class in Russia that are using a large part of their disposable income on consumption. Yeah, I actually think this is a very good time to invest in Russia. The economy is perhaps stronger than ever. Growth is quite robust. Inflation is at all-time low. Russia has excellent public finances. When the rest of the world are worried about public debt and overly leveraged consumers, Russia sits on one of the lowest public debt levels in the world, and the Russian consumers are just starting to tap into the credit market. At the same time, the Russian equity market is trading at an historically large discount to other emerging markets. It's trading at a P level of around 6. Even though Russian corporates, the earnings are growing very rapidly, the market has performed very well at the beginning of this year. And perhaps most importantly, we're seeing a number of very important triggers for Russia. With the presidential election in early March as the most important one, a lot of investors have been a little bit hesitant on Russian politics after the demonstrations in December, but are starting to buy into the market when the elections results are becoming clear. We also have Russian WTO session this year. We have a privatization program that's going on. And finally, Russian companies are starting to pay dividend. This was a discount factor for many years, but especially in the energy sector, we're having a number of Russian companies with paying dividend yields over 10%, which is quite strong even in international comparison.
you can see, lots to think about in terms of investing in Russia. I hope you've enjoyed this issue of Think Global with David Thomas, and I look forward to seeing you next time. Bye for now.